Happy New Year and welcome to our first 5 things investors need to know update in 2024. I'm Valerie Leonard, founder of EverThrive Financial Group, and let's take a look at what may be in store for us this year. First of all, GDP is expected to slow in 2024, both here in the United States and also globally. And I mentioned in a recent video that I posted to YouTube that GDP was better than expected at the end of 2023. But keep in mind that that growth was being driven by government spending and also consumption. And neither of these things support sustainable growth over the long term. We're also expecting that the Fed's efforts to keep inflation under control could continue to restrict growth. There is some good news here, though. Slower growth makes it easier to tame inflation, which brings us to the second thing that investors need to know this month. Inflation has been cooling, which has caused some speculation that the Fed may actually cut interest rates this year. The Fed kept its policy rate steady for the third consecutive meeting in a row in December, which does tend to signal potential rate cuts. And this has led to a lot of the headlines like this one that you see here. But keep in mind, Federal Reserve Chairman Jerome Powell has also said that he won't rule out further tightening if inflation continues to move in the wrong direction. And inflation did tick up at the end of 2023. So the Fed's going to be trying to balance stubborn inflation with concerns about restricting growth here in the US and also their monetary policy. So, what does this mean for you as an investor? I think that there is a disconnect between what the Fed has shared in terms of potential rate cuts and what the market is perceiving. So, as of today, January 22nd, we believe that there's about a 50% chance that the Fed may actually cut rates at their March meeting, and this is what the market is actually pricing in. I personally think that chance is probably a little bit high. At the beginning of this year, the market was perceiving that there could be as many as 6 rate cuts this year. So this expectation has dimmed even since January 1st after a mid-month market dip. And when markets are expecting something that doesn't happen, it leads to volatility. So you need to be prepared for that. If they cut rates, that may mean that the economy is softening, and we don't know that we want to see that necessarily. Third, of course, another presidential election year is upon us, and I know we're all ready for that headline news. And we've been getting a lot of questions on the potential impacts. So we always want to remind you that past performance, of course, is no guarantee of future results. But I want you to take a look at this chart for some historical reference points. This chart shows that in every single election year where an incumbent president is seeking re-election, just as Biden is this year, that we typically see above average US stock market performance regardless of who wins in the end. So the S&P 500 has gained all 14 times in the year that a president has sought re-election since World War II, and that's regardless of the election outcome, like I said before. But keep in mind that economic and inflation trends have historically had a stronger and a more consistent relationship with market returns than election results. But still, there are some seasonal patterns to election years. The first quarter is typically choppy, as you can see here in the gray areas. So we may see a first quarter market pullback due to uncertainty this year. But again, this is a common pattern. Let's talk more about the markets with the fourth thing you need to know this month. Equity markets ended up for the 2023 calendar year with a lot of champagne popping in celebration. And while the end of the year rally has boosted investor confidence, keep in mind that the majority of gains have come from the Magnificent Seven stocks, or also they've been dubbed the Super Seven stocks. So those companies are Google, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. And these 7 stocks make up the top line that you can see in this chart here. These company stocks were up 70% last year, whereas if you look at the other 493 non-Super 7 companies, they were basically flat. 70% of companies in the S&P 500 underperformed the index this year, with approximately a third of those falling and losing money in 2023. So the remaining 493 companies in the index are represented in the blue line on this chart. And what I take away from this chart is that performance was extremely lopsided last year. We call this concentration risk. We haven't seen this since the dot-com era. And that does tell us that diversification in a portfolio can be extremely important in a time like this, and that the performance that we saw in the market last year is not necessarily a true indication of total economic health. Fifth, at EverThrive, we do our best to prepare for the potential for expected, better than expected market outcomes, but also worse than expected market outcomes. And so I'm hearing from some business leaders that they feel like we are already in a recession. And I know some of you agree, even if we aren't there by the technical definition. The silver lining is that even in recessions, there are opportunities. So, one example that I can think of, if you look back at the last 5 of the last 6 recessions, large cap companies have historically outperformed small cap companies in the 24 months leading up to a recession. But then, immediately upon entering a recession, small cap stocks reversed and outperformed large caps for the next 3 years without exception. Of course, this is not a forecast, and history doesn't always repeat itself, but we are prepared to adapt to economic and market conditions to help our clients find potential opportunities and stay on track for their goals. If this information has been helpful to you, don't forget to subscribe to our YouTube channel or look EverThrive Financial Group up on social media. That's it for today. Thank you so much for watching, and please do subscribe to our channel to be notified of updates this year. All of us at EverThrive wish you a wonderful 2024 ahead.